Trading Market Technicals morning call video for Tuesday, July 2nd. The retracement continues. Dow at one point was up about 150 points or so. Ended up giving half of its gains back to close up about 77 or so points. Obviously, S&P, Russell, NASDAQ, transports all followed suit. We'll get into charts in a moment. But I do think that this bounce is nothing more than a dead cat bounce, low volume. And the reason also is that you have, on the beginning of every month, you have mutual fund inflows that come in and buy the market. They have to put money to work, and that's why I didn't believe that the market was up. We also have, as you know, the July 4th holiday on Thursday. So I don't really suspect anything happening. And I think it's just going to get worse and worse as the week progresses. So, I would say pick the best setups. If you don't have any or you don't see anything, really you got to look for something with catalyst. And sometimes the moves already happen first thing in the morning in a pre-market session or the overnight. So that's something that we have to deal with this week. But I do think next week we should market should really start to hum along again. Again, I think it's going to be quiet. I think it's going to be subdued. And that means that when you have quiet trading, usually the markets tend to either stay sideways, choppy, or just grind a little higher. So that's something that we need to think about. Now, we do have our indicators here, and let's get right into it with the McClellan oscillator. We are at our Bollinger Band here. So remember, every time we get at or near it, or we pierce it, usually get some sort of retracement. Now, that doesn't mean that the markets can't go higher and we continue to move outside of the band. But this is something that to me that says, okay, we're overbought in the stochastics. RSI is not nearly overbought, but getting there. So it could be any day now that the markets could actually just start to reverse course here. So we've had 4 days of gains, and to me, I think that's a bit stretched. With low volume, you need to be cautious here. So I want everybody to be aware. If you are long or you're taking a swing trade from the bottom at these lows, just tighten up stops because the markets do look like they're getting a little bit stretched and a little tired here. Okay, so let's take a look at the tick. The tick continues to be below zero, and that's something that's not what you want to see if you're a bull. As you can see here, we've been up from all of 2012 and all of 2013. Barely, we just got that little move lower, and then we came back up again. But now we're hovering zero. Is the end of day tick. So this is not what you want to see. You want to be always above zero and stay above zero. So that's interesting. New highs, new lows. As you can see here, when the market did spike, when we had that low, and I showed this chart to you, said this actually put the low in. So the new highs, new lows, nothing to be scared about at the moment. So this is actually working out pretty good now. We're back at these lows again. So that's a good thing. Let's take a look at the VIX. And the VIX here is back into this 16, 17 area again, back in control again from this big spike up again. But this is what you want to watch. You want to watch this area, this 1920 area. It's the same thing like the tick. If the VIX continues to hang around these levels here at 21, 22, you're going to have fear coming into the markets again. Right now, volatility has dried up again, as you can see. We had a nice big burst up, and then all of a sudden we just fell to the waistline here. So now things have gotten really quiet, which tells me that I think a bigger move is to come. So just keep an eye on the VIX and see where the VIX starts to point and starts giving us an idea where it's headed. The Nikkei actually bottomed here in this area pretty much most of June, and then now it's starting to move back up again. But, to me, I think that, if we get at this right around this area here, it's going to really need to prove itself to move back up higher again. And remember, right now, market participants say when the Nikkei's up, the yen goes down, and when the yen goes higher, the Nikkei goes down as well as all the other markets, and that's really what that is at the moment. Don't ask me why, but it tends to be that way. So you want to look for stocks and indexes that give you some sort of a hint of a risk-on, risk-off type mentality in the markets. Take a look at the emerging markets. I wanted to show you, haven't showed you this in a while. And as you can see here, nothing more than, to me, is a dead cat bounce right into the 20. Has a lot of work to do. We could even run up to the 40 area and still be in a downtrend. So you can see here, we're clearly in a downtrend. And I think that the markets here, as you can see, we're now a little bit getting overbought now. Stochastics, MACD, not quite. And, of course, this is our ratio chart from the EEM to the SPX, and we're still in a downtrend. So I'd like to see the market start to turn, back test this downtrend line, and then move higher. that would also help put bid into equities, and that's why the my analysis says to me that the market's probably due for a retest of the lows, and then sometime towards the end of the summer we start to rally again, go into that fourth quarter rally. And it doesn't have to be right at September. It could be usually happens October, early November. We get that Santa Claus rally, and it could be even later than that. So that's something that we need to think about. But I do like the fact that we can look for maybe a 6 or 8% correction. And then really start to rally. That would be ideal. That would be an ideal situation. But again, we need to take it one step at a time. We don't want to be too far of ourselves. Here's China, FXI, ETF, the China ETF, and as you can see it clearly in the downtrend. China is clearly slowing. We did mention that. Been mentioning that for months until nothing happens, until everybody starts to get wind of what's going on in China. And I think that is going to be the canary in the coal mine to send stocks much lower, at least for some sort of a pullback, not what we had for 4 or 5 days and then we just rallied back up again. So that's something that I'm watching closely, is the China markets. Okay, so let's get into the charts here. Again, guys, not much really to talk about. We're still below the downtrend line in the S&P cash. We did make a little bit move higher from Friday's low, but again, we're still back testing this area. We really haven't gone anywhere since Thursday, Friday, and of course yesterday. So we really have inside days. So this market needs to really start to prove itself. And like I said yesterday, it's at an inflection point that the markets need to do one of two things: either going to break higher, or it's going to roll back down again and at least test the lows here. So we need to see what's going to happen. Let the markets tell us. Spiders, really not much of anything. You can see we've got all these little doji candles, and to me, like I said, because price, yes, is about 6-7 points higher, but that doesn't mean that this candle is not telling me anything. It's just really small gap up, gap down candles, and the body of the candle really not going anywhere. So I would love to see little nice green engulfing candles on the way up, but this has not happened. So as you can see here, the last 2 days, the market's been a little bit mixed here as far as where it wants to go. We're still hovering below the 50-day moving average, and we're below this downtrend line. So again, to me, this still has bearish symmetry, bearish pattern. We're inside a downtrend channel, so we're really going to need to either break above it, or it's going to fail and break back below it. I think it's going to eventually fail, and it might not be this week. I think maybe we could just chop around here for the rest of the week, and then reevaluate it next week. And I think that's really what's going to happen here. And here's just a 30-minute chart. Just wanted to show you guys. We're still, as you can see, the Bollinger Band still needs to be tightening here to see some sort of a bigger move like this area here. As you can see, once you get a tight pattern and we break down or break up, you usually get a bigger move. It doesn't tell you what direction, but that's why I like looking at the Bollinger Bands on the 30-minute chart. And here's the diamonds. As you can see, same thing with the diamonds, right? Repetitive patterns. We have below the 50-day moving average, below the downtrend line, and this just gave us a gravestone doji. So indecision, and we're still here. And the Dow Jones looks actually pretty weak, if you ask me. Here's the transports. We did get that head and shoulders pattern, that break below this area here, which is the 112.35. We can't get above the 50-day moving average, and we're just sitting on the 20-day moving average. So again, pattern doesn't look so great. We did move up in the last 4 or 5 days, but again, guys, we need to really start to break above these sectors, these important sectors that we follow. We really need to start breaking back above it to get any sort of bullishness in the markets. Right now, even though the markets have gone up for 5 days, it just to me not too crazy with the way this market looks at the moment. Now the Russell here is the strongest of the 5 that we follow. We do have the 50. We're above the 50-day moving average and above the 20-day moving average. So that's really good. That's definitely a good thing in the bull camp here. And we're above the a long-term uptrend line from November. So everything pointing to higher price. And can the Russell take this market higher? Sure it can, absolutely. But I think it's got too many things against it to actually take the markets higher here. Unless everything else starts to follow suit. Now, we did have copper, which I did not show you. Copper made a good move yesterday, so that's also another good thing. So if copper starts to rally and Russell starts to rally, and then you have the transports kind of reverse course and everything starts to humming along again, then I think that you could get a test of the highs again. But I think that's a little far-fetched for now. Again, we need price to prove that the markets want to go higher. And just again, Goldman Sachs, nothing happened here the last 5 6 days. So we did get a little bit move yesterday, and then we just kind of rolled back down again. So Goldman here, kind of dead money for the moment. And again, same thing with the XLF. We did manage to get above the 50, above the 20. We had a big move up higher, and we sold all the way back down again. So this topping tail here is concerning if you're trading the banks. And Apple did have a good move up, as I mentioned. We're above, right around the 400 area. Now Apple needs to get back above 418 and really back above the 50-day moving average, which is really about 435. Again, to me, Apple is just a day trading stock. I'd stay away. I do think there's lower prices before you really want to get involved with Apple. Again, if you're a long-term investor. If you're trading it, then obviously have fun trading it. It is a decent trading stock at the moment. And lastly is the Qs. Qs, same thing. Inside the downtrend channel, bearish symmetry here. We're below the 20 and below the 50-day moving average. So tech stocks are a little bit weak here going into the summer weakness here. We are going into a seasonal weakness time of the year, which is actually right after the holidays. It starts to slow down again, and we get that little chop to sideways to down momentum right after the holidays. So usually second week of June, and then somewhere in the middle of August, we do get a little bit of that weakness. Now that doesn't have to happen, but if you're looking at seasonal trends, that's which I do look at regularly. That is where we are at the moment. So holiday week, pick the best setups. If you don't see anything, cash is a position. Go through the week nice, relaxed. You don't have to be fighting the trend, especially in this market here at the moment, okay, guys? But I do think we might get a couple of decent moves where we can capitalize on the week. Let's see what happens today. Let's see what the markets bring us. Right now, we're kind of trading flat in the early morning session, and we'll just see. We'll take it one step at a time. Have a great day, everybody. Good luck trading today, and I'll speak to you tomorrow. Take care.